Many senior donors, church leaders, and supporters hold permanent life insurance policies that were originally purchased years ago for mortgage protection, business needs, or estate planning. Today, those original needs may no longer exist, leaving them with a policy they might not even realize can have significant charitable impact. This video was created by the Hidden Asset Advisory Group, a partnership of Robert D. Kavanaugh, CLU, a 50-plus-year life insurance professional, and a 23-year-old life settlement company. Hi, I'm Michael, your host for today's video. Today, we'll walk through how donating a life insurance policy to a church or nonprofit works, the strict tax rules involved, and a powerful alternative, a life settlement, that could provide far greater funding for the church or charity and a larger tax benefit for the donor. If you're considering transferring a permanent policy directly to a church or charity, there are 5 key steps you must complete. First, confirm that you hold full, clear ownership of the policy with no outstanding legal disputes or split ownership issues. Second, check for any existing policy loans, as transferring a policy with loans can trigger unexpected taxes. Third, check with the charity to ensure its gift acceptance policy allows it to hold life insurance contracts. Fourth, request official ownership and beneficiary transfer forms directly from your insurance provider. Finally, pull together all records of the total premiums you have paid over the life of the policy to establish your cost basis. When you give a life insurance policy directly to a qualified nonprofit, the IRS imposes a strict limit on your income tax deduction. Your deduction is capped at the lesser of the policy's fair market value or your cost basis, which is the total premiums you paid minus any previous withdrawals. This means that even if your policy has a high cash surrender value of, for example, $250,000, if you paid $100,000 in premiums over the years, your deduction is capped at $100,000. Additionally, this deduction is generally limited to 50% of your adjusted gross income for the year, with a 5-year carry forward for any remaining amount. We recommend consulting a qualified CPA, tax attorney, or licensed professional for actions involving IRS forms, appraisals, and transfers. If an appraisal is required, you cannot use your own insurance agent, the insurance company, or the receiving charity for this report because the IRS requires complete independence. Instead, you must hire a credentialed valuation expert, such as an independent actuarial firm or specialized valuation firm. Timing is critical. The appraisal must be completed no earlier than 60 days before you make the gift, and you must have the completed report in hand before you file your tax return. To calculate your policy's fair market value, the appraiser will need detailed policy data. An in-force ledger is a forward-looking mathematical projection of how a policy will perform based on an assumed interest rate, cost of insurance charges, and mortality factors. The insured or agent can request this from the insurance company, but it is not sufficient. The appraiser will ask for an in-force ledger with specific projection scenarios, called solves. These include a paid-up solve to determine whether the existing cash value can keep the policy active forever without additional payments, and a minimum premium to maturity solve to find the absolute minimum ongoing cash required to keep the coverage in force, usually through age 100. 2 critical IRS forms are needed for an outright policy donation. First is IRS Form 8283, which reports non-cash charitable gifts. Section B of this form must be signed by you, the independent appraiser, and an authorized leader from the receiving charity. If your deduction is over $500,000, the entire written appraisal report must be attached to your tax return. Second, you must request IRS Form 712 directly from the insurance carrier. Unlike a projection ledger, Form 712 is an official, certified document from the insurer that verifies the exact policy values and reserves as of the precise date of the gift. Once a policy is donated, someone still has to cover any ongoing premiums to prevent the contract from lapsing. If you, as the donor, continue paying the premiums, you can claim those ongoing out-of-pocket payments as additional tax deductions. However, if the charity takes over paying the premiums out of its own budget, it creates significant long-term financial risk. If internal insurance charges rise, the charity may be forced to pay higher than expected costs just to keep the policy active, straining its operating funds. Because outright policy gifts carry strict tax caps and ongoing maintenance hassles, a much better alternative is often a life settlement. In a life settlement, you sell your unneeded policy to an institutional buyer for a lump sum cash payout. That cash payout is substantially higher than the cash surrender value you would get from surrendering the policy back to the insurance carrier. Once the sale is complete, you simply donate the cash payout directly to your church or charity. Choosing a life settlement creates a win-win scenario for both the insured donor and the charity. First, the charity receives immediate cash liquidity today instead of waiting until the donor dies or continuing to pay premiums. Second, your tax deduction is based on a direct cash gift, allowing you to deduct up to 60% of your adjusted gross income, completely bypassing the lower caps that apply to physical policy transfers. Third, the mechanics are far simpler for both the charity and the donor. For the charity, there is no need to track policy status or worry about future premium increases. Using your life insurance policy to support a ministry or charity you care about is a remarkable way to leave a lasting legacy. However, because every policy and tax situation is unique, we strongly recommend consulting with a qualified financial advisor, CPA, or tax attorney before proceeding with a life settlement or policy transfer. If you're a donor to a church or charity and have a life insurance policy, we can tell you whether it qualifies for a life settlement with our 2-minute survey. Just see the assessment information in the description. If you found this video helpful, you may also be interested in our video Unlocking Dormant Ministry Capital Through Life Settlements, which explains in more detail how life settlements can help churches unlock hidden cash for current ministries or enhance their endowment fund. Just click the video thumbnail above.